In this video, I'm using the problem 19 as an example to discuss a company's tax footnote more. The reason we focus on the tax footnote because it provides additional information or supplemental information which we cannot find from anywhere else. Okay, so it is quite interesting, and also we can get some insightful results by reading the footnote carefully. So this example is for the Nike, okay, which is you guys are all familiar with, right? The footnote disclosure is very similar, but each company they can have kind of discretion to disclose more information, because Nike is more complicated, okay, than the insurance service company we discussed in problem 18. So it includes more information. Okay, we can find, there are more sections in this footnote. Right? It reports the income before tax. Here. Okay. Actually, this information is available in Nike's income statement. But it disclosed here, just give us a comparison. I'm going to tell you later. And the income before tax from two sources. One is United States, the other is foreign. The total here represents the consolidated income before income tax, which is the sum of U.S. market and the foreign market. And from the number here, we find that the foreign market contribute more than the U.S. market, so which is quite important for Nike. Okay. By intuition, we know if the company make more money, so it should pay more tax, right? So the company should pay more tax to the foreign governments than the states. But actually, what we find here in the next section is by reading the current section. Okay, so current. We find that Nike pay 469.9 to U.S. federal government and state government. Okay, almost more than 500. But only pay the foreign countries how much? Less than 400. So it is quite interesting. You make more but pay less tax, right? So the reason is what? Probably think the reason is because the tax rate. Yes, you're correct, because a lot of countries, they are paradise of tax avoidance, and a lot of countries, their corporate income tax is quite low, not as high as the United States. I think the United States corporate income tax is highest all over the world. Okay, so that's why Nike paid less tax, even the income before tax is greater. Okay. Okay, so this is a current. It also means a tax owed, as we discussed in the problem 18. Okay, so here, provision for income tax. So this represents a tax expense. This represents tax owed, right? Oh, this is tax owed. This is tax expense. So the question 1 asks us, did income before tax exceed or fall short of taxable income for 2007? Okay, we just compare these two numbers, right? So in this case, the tax owed is less than the income tax expense. Well, we can conclude. Okay, let's refer to the formula. When the tax owed is less than tax expense, actually the taxable income is less than the income before tax. Actually, the company will recognize deferred tax liabilities. Right? Or to answer the question, this is enough. Taxable income is less than the income before tax. question B is the same item just for 2008. What we find here is tax O is greater than the tax expense. So we can get a opposite result. Basically, is taxable income is greater than income before tax. Right? Because tax allowed is greater than tax expense, it is equivalent to tax income is greater than the income before tax. Okay, so we answer the first question. So question C, the adjustments in the statement of cash flow for 2008. Okay. So to answer this question, actually we take a look at this number, the deferrals. Right. So in this case, similar as the example in question problem 18, the company pay more tax than it incurs. So when you prepare the income statement, you deduct 619.5 tax expense from revenue to calculate net income. But when you prepare a statement of cash flow operating section, what do? Because you subtract less, now you should subtract more. What amount you should subtract from net income? Yes, the difference. So the answer to the question C is the adjustment to net income to compute cash flow from operations will be a subtraction, because the cash payment is larger than the income tax expense. Okay, question D. Based on the tax law, Nike recognized an estimated expense of revenue deduction earlier for financial reporting than the tax reporting. Okay, so in this case, actually we can, because financial reporting recognize them earlier than the tax reporting, so actually the taxable income is greater than the income before tax. Okay. Because you recognize the revenue deduction or the expenses early, so we expect the higher or lower revenue but higher expense in financial reporting. So the income before tax is less than taxable income. Right. So we can conclude the company should recognize deferred tax assets, okay, because of the description in D. And basically we also find these two items here. One is this one, the other is return. They are both reported in the deferred tax assets part. Okay. So they are all reported in the deferred tax assets. That's actually consistent with our expectation. And also we find from 2007 to 2008, these two actually both increase. From 12.4 to 13.1, the other is from 42.1 to 49.2. So this increase indicates Nike has sales growth, and there's assumption that the rate of return and the collectability was not adjusted by the managers. Okay, so if the managers do not usually adjust their estimation of the percentage of uncollectabilities. So the only explanation for the increase in the deferred assets of these two factors is the company has increase in the sales. Okay. Because only when sales increase, the company will incur more bad debt expense and incur more revenue loss from sales return. So this is the only reason contribute to the deferred assets increase for both factors. Question E. Nike recognized deferred compensation expense earlier for financial reporting than tax reporting. So this is same as same direction as question D, right? Again, we also recognize deferred tax assets, so we can find the deferred compensation and stock-based compensation here. Okay. They are both expenses recognized early in financial reporting. So the taxable income is greater than income before tax. So tax owed is greater than income tax expense. So will result in deferred tax assets. What we also observe the changes in these two factors from 2007 to 2008. Both actually increased. So what this increase tells us? Right. So these are expense deducted earlier in the financial reporting, right? So the only thing can explain this two factors sustain the increase in deferred tax assets is either Nike increased the compensation benefits for their current employee, or Nike increased the number of recruitment or number of employees. But usually, if the company Nike does not disclose any information regarding the increased compensation benefit for their current employee, that means they hire more. Okay, so that's one of explanation. So question F. So this is a new term to you, the valuation allowance, which is a control account to the deferred tax assets. Here, right? So different signs. All these are positive, and this will be subtracted from the total deferred tax assets. So what's the meaning of valuation allowance? So actually, deferred tax assets is kind of a benefit for company, because deferred tax assets is considered a prepayment of tax to the government, right? And this will offset the future profits or future tax liabilities. So this is like a kind of benefit for company. But some benefit may not be able to be realized in the future. For example, the just like the foreign loss carry forward. Okay, so if the company incurred loss, this will be recognized as deferred tax assets. But this benefit may not be realized in the future because the loss carry forward will expire. Okay, in the United States, we know that's about 20 years. After 20 years, the deferred tax assets will be removed from the company's book. Okay. So what we find is the valuation allowance will decrease a little bit, right? 1.6 decrease, 1.6 decrease from prior year. So this slight decrease indicates Nike's greater confidence that there is a reduction in profitability of not being able to realize the benefit of these tax laws carry forward. The reason may be a better prospect of future profits that can be offset by tax laws carry forward for tax reporting purpose. So this is actually a good sign that Nike expect they are going to make more money in the future. Or if we can take a look at this one, the foreign loss carry forward, we find there is an increase, right? So when there is an increase, that means the company actually some subsidiaries of Nike's foreign operation incurred loss continuously. So that's why this account keep accumulating. or keep increasing. And the valuation allowance, this means some of the benefits of deferred tax assets cannot be used. So we use allowance methods to deduct the balance of the total deferred tax assets. But we also find here is a decrease of allowance, right? So that means Nike now has confidence it is going to have the benefits of deferred tax assets. So, in other words, the Nike will expect there will be a change from loss to profitability. Question G. When Nike acquires Ambro, it was able to deduct a large number of these amounts currently. Although for financial reporting, the company is required to recognize intangible assets. So actually we know this large amount of deduction will make the income before tax is greater than taxable income. Okay, because large deduction allows for the tax reporting. Right, so taxable income will be less than income before tax. So that's the reason of deferred tax liabilities. Right, so that's the reason why we find the deferred tax liabilities in the income tax footnote. Okay, so this is a very large increase actually. The question H. Nike recognizes share of earnings of foreign subsidiaries each year from financial reporting, but recognize income only from the receipts of dividends. So that means Nike recognized income in their financial reporting earlier than the tax reporting. So this will result in the income before tax is greater than the taxable income. Actually, this. So the income from subsidiaries will be recognized here early than the tax reporting. So deferred tax liabilities, right? So that's also we find in here. Distribute earnings of foreign subsidiaries. Okay. So question I, why does Nike recognize both related to the investment in the foreign operations? Actually, we know Nike not only has one subsidiary, it has lots of subsidiaries all over the world, like in Thailand, India, China. So subsidiaries probably make profits, but others make loss. Right? So they have different effects and different direction. So some will be recognized, some contribute to the deferred tax assets, while others contribute deferred tax liabilities.